Hi everyone, welcome to Money Cat. Boy oh boy, did we get beat down today. SPY went down almost 6% and it was bloodbath, red everywhere. So we're going to take a look at why it happened and going forward over the weekend, what we can expect and how to position ourselves better for the next week. So first, let's take a look at why the market tanked today. So first, there was an increase in coronavirus cases in 22 states that have reopened. Some states are faring a little bit better than the others, but at least in those 22 states, especially like Arizona, the increase in hospitalization and number of cases, they have significantly increased since the reopening of their economy. So people are getting worried about second wave of coronavirus hitting and possible reversing of reopening in phases. Although I do not think that will happen because it is much harder to go back to being shut down and closed than the initial first time. First time, I mean, people were dying, people were worried, and so they're like, okay, let's shut everything down and social distance. People are like, okay, that sounds like a great idea. But now we tasted the freedom again. We're reopening, and it'll be much harder to get people to go back to shut yourselves inside again, and let's slow down the reopening phase. So that'll be much harder for people to accept. So that will be a drastic measure. And if that ever comes to fruition, that'll be a bad day for the markets. All right, number two, there was the Powell statement from Wednesday. Personally, I thought it was kind of in line and realistic view of the economy. However, I guess a lot of people took it as kind of negative outlook, which I don't really get because, I mean, look at the unemployment rate, look at what the businesses are doing or have been doing for the last 2 months, which is basically nothing. So I don't know what you're expecting other than, yes, economy will struggle and the recovery will be slow. Stock market is not equivalent to US economy. They're two separate things. So just because the stock market has recovered in basically a V, which most experts said it won't happen, that doesn't mean the economy will also recover in a V shape. And then third, I do think this actually had the greatest impact is last few weeks. I mean, we've been going up and up and up in the stock market. So it was just due for a pullback. It was just too hot. Market was too hot. So basically being overbought too quickly. So because of these three reasons, today I think it tanked more than it normally should have because all these three factors combined to have a greater effect. So going forward, what can we expect, especially over the weekend? Do we want to hold any position over the weekend? Well, here's the narrative right now. The story of the market. So I think number one, aside from the pullback, because that's kind of natural thing happening, with regards to coronavirus, so you have three possibilities that will happen over the weekend and into next week. Number one, cases start to decrease again. And this one, very unlikely. I do not think this will happen because one, we're not dialing back any of the reopenings and the numbers won't change dramatically in that short amount of time. So I don't think this will happen, which is bad news for the market. Option number two is the number stays about the same. Okay. And this one's more likely because the numbers probably won't change dramatically. So it's either going to be option number 2 or option number 3, which is cases continue to increase. And this will be more bloodbath for the market. So what can possibly combat these negative outlooks? Well, there's always the Fed and providing more stimulus. Is that going to happen over the weekend? Probably not. I think the Fed is now taking a little bit longer time to assess things, kind of taking wait and see approach. Another possible positive news could be vaccine related. Any good news on vaccine will drive the market up again. However, most of the big companies are scheduled to start massive testing in July. So there isn't really anything going on at current time for any big news. So until that July testing concludes, likely we won't see any big good news out of those companies. So just based on the narrative and what could possibly happen over the weekend and into the next week, I'd say it's more on the negative side than the positive side. So with that in mind, let's take a look at the charts and see what it can tell us. So if we take a look at the SPY chart, this is 180-day time frame. The first thing I want you to notice, obviously after today, the RSI is below 30 and MACD has plunged. If we zoom in a little bit here, let's go to 20-day. Same story, RSI below 30. The MACD has started to fade up towards 0. It hasn't crossed quite yet, but if we close in a little bit more, 10-day chart, same story, RSI was below 30. It did go up a little bit, and MACD has crossed over. Now, because these are on a smaller or shorter time frame, this does not mean that the market will suddenly reverse and go up. However, from this, maybe there will be a small bounce tomorrow morning, maybe not. For more confirmation, I like to refer to the longer time frame, mainly the 180-day chart. So let's go back to the 180-day chart. This is where we ended up, and this is what I called no man's land. It's not quite at the support level here at 297, and it's definitely not close to the resistance level, which is probably about 312 or so. So at this no man's land, really I feel like it's a coin flip as to whether it'll go down or it'll go up. So I don't like to play stocks at these positions. Let's take a look at 1-year chart. I want to bring your attention to what happened after today. The MACD has made a crossover. There is no red bar here yet, but it has crossed over. Likely it may go down and bring the stock down with it. But this is on a 1-year time frame, so it may take quite a while for it to manifest. So what will happen over the weekend? If we do make a strong move, I can expect it to go all the way up to this 312 level to test this resistance. However, I think more likely scenario is to have it a little bit of bounce and then go down even further and test this support level, at which point we will reassess. Right now, the future is doing okay. It's up almost 1%, but considering today's move of 5.76%, it's just a rebound effect. There's a lot of time until tomorrow's market open, And especially during these volatile times, you can't really just predict what's going to happen tomorrow based on a little move after market. Thanks for watching. Don't forget to like the video and subscribe. These are very confusing yet exciting times for traders because there's so much volatility, the moves are huge, and opportunities are abound. I wish you good luck, and I hope you stay green. And I'll see you next time. Bye.